So today we have a very, very special guest, whom I'd like to invite on stage right now. Ladies and gentlemen, please welcome the Deputy CEO of CGS International Securities Malaysia, Encik Khairi Shahrin Arif Baki. And of course, my loyal co-host and the guy that signs my payroll checks on Borak Bursa as well. Ladies and gentlemen, CEO of Equities Tracker, Alvin Vong. Testing. Yeah. Okay. Faiz, the clicker is. Okay, there we go. Have a seat, guys. All right, so we will start the live podcast recording on my go. After that, ladies and gentlemen, if you can just kindly put your phones on silent and also hold off any questions that you guys might have. Even if you're waving your hands frantically at the back, I might not be able to answer you until after the podcast recording is over because this will go up on YouTube and everything as well. But later, like I said, we will have a Q&A for you guys. So just be patient, and after we're done with the discussion, we'll open the floor to Q&A. So please write your questions down and let us know afterwards, okay? All right, gentlemen, are we ready? Let's do this. Okay, so I just want to introduce our guest a little bit. Encik Khairi, thank you so much for joining us. Encik Khairi is the Deputy CEO of CGS International Securities Malaysia, which represents China Galaxy Securities, is the local branch of it, right? And you have more than, I went to your LinkedIn, so you have more than 20 years of capital market experience with JP Morgan, OSK, Citibank, Maybank, and now you've ended up at CGS Securities. So maybe you want to tell us a little bit more about CGS Securities and what you guys do in Malaysia.
Thank you for the introduction. And yeah, great to have you all here as well. A bit of introduction on CGS International. We rebrand ourselves. Previously, we were known as CGS CIMB, a joint venture between CGS and CIMB, obviously. And CGS from China bought over the remaining shares of CIMB, and we rebrand ourselves CGS International early last year. And what we do in CGS is like we're very much like an investment bank, but of course without the investment bank license, we call ourselves CGS International Securities. Whatever that investment banks are doing, investment bank, advisory, corporate finance, securities, futures, we do all those things. And the only thing that we're not doing is actually treasury and debt capital market. Those are the only things that we are not doing at the moment. We also have our asset management arm as well. All right, we added that 2 years ago. And of course, our bread and butter, the equities business, which is our biggest contributor. And I would say that we always try to differentiate ourselves than other players in the market. We were the first one to come up with structured products from a securities company. Usually structured products come from investment bank or the bank side. We also have a contract for difference, or CFD. We are the only two providers of CFD in Malaysia. The other one is Philip, and we are way ahead in terms of market share for CFD as well. And another way that how we look ourselves also, we try to differentiate with more Sharia products. Whatever products that we have, usually if it can be a Sharia product, we will launch a Sharia product as well. I think I just stopped there first. Thank you.
Actually, we have a little bit more to ask you about your company, because I went around your website to poke around a little bit, and we found a research white paper page. And I noticed that out of the last 6 research papers that you guys published, 5 of them are about tariffs and the US trade war that's going on right now. So of course, we wanted to ask you guys, was this a surprise for you? Like, in the sense of like when this whole Trump tariff war came up, did it catch you guys off guard as well? And what was the sentiment like in the office?
I wouldn't say total surprise in that sense, right? For us, because our parents, China Galaxy, in the past 2 years, we have been receiving a lot of delegates actually from China. All right, they've been going around ASEAN actually. I take example last year, right? A busload of Chinese medical healthcare actually, medical equipments and pharmaceutical. They were in Indonesia. They went to Singapore, and then they came over to Malaysia to explore and to see if it's possible for them to relocate some of their manufacturing. So this happened last year, months before this whole tariff, right? So I guess for them, they were preparing themselves like, look, things gonna. I think they did, the whole trade war has, escalated and everything. Internally in China also, things have slowed down quite a bit, right, in the past few years. So they are looking ways to go outside of China, and with the acquisition of CGS, and we played that role because we're not just in Malaysia, we're also in Singapore, Indonesia, and Thailand. Our presence in ASEAN, and we also have partners in both Vietnam as well as Philippines. So they will been trying to understand better because this is a new landscape to them. Right. So that's one. We also had other from Shenzhen, from, if I pronounce it correct, Guangzhou. Yeah. All right. We had a KL20 conference early last year, probably in April, where about 100 delegates actually were in KL, exploring with different groups. So as I say, of course, whatever that Trump announced, everybody was caught off guard a bit in terms of the amount. But in terms of what we have seen in the past 2 years, they have been here. So we have been hosting them, these delegates, and meeting up with the likes of IRDA, with MIDA, and for them to understand better, at least on Malaysia's side lah. That's what we're doing in Malaysia. So it is still a surprise, but yeah, we kind of saw it coming a bit.
Just to bring Alvin into this conversation, Alvin, I mean, we've talked a lot on Borak Bursa about this exact thing, right? You want to test your mic first? Faiz, I think Alvin's mic is not making any noise. Okay, we'll switch to the conventional mics. Yeah.
Sorry, what's the question?
Okay, so we've talked a lot on Borak, and you've always said that Malaysia has excellent infrastructure for people to come in and set up manufacturing facilities here. Do you guys both feel that now is the time for Malaysia to shine in this regard? Of all the pent-up demand, like China is now ready to come in and invest big time in our manufacturing facilities, in our data centers, and so on and so forth.
I think if you look at the last 12 months, maybe 18 months, we're actually seeing both the West and the East coming to Malaysia, especially when we talk about data centers. It's not a single country of origin. I think if we look at kind of the history of where Malaysia has been since probably slightly before COVID, when our leading coalition lost in the elections and opposition won. I think not so much about infrastructure, but because we had a lot of political uncertainty during that period. And I think finally in 22, when our current PM kind of
unity government
a bit more stable. So of course, in comparison, if you compare us versus like maybe Indonesia and things like that, so not when people are looking to relocate, it's not. I think labor is one issue, but it's probably not the only single largest issue. So I think in terms of shining, I think we were quite good in terms of, we look at our quarterly GDP growth in last year before that. Of course, the Q4 we were slightly below expectations. Of course, until this hit us, right? Trump's tariffs, but I think they are trying their best, or because this is very much a diplomatic or a G to G kind of conversation that really will affect the global economy, right? But I think on the tariff side of things, with the US, if we're negotiating directly with the US, we don't have a lot of leverage, unfortunately.
But no one does, right? I mean, except for China and like maybe India or like really big countries, right? Like all the small countries don't really have leverage.
We don't really. So leverage is right now both China and the US kind of still need each other, right? They still need each other. Need each other, right? Do they really need Malaysia? I think we're a bit too small. They're too big to fail, and then I think we're too small to kind of matter at this point. So, not really in a position of bargaining per se, lah. But yeah.
So, I mean, talking about the delegates that are coming down and all that, obviously, some people in China are interested in Malaysia very much. So, President Xi as well made his way down on his charm offensive tour. Why? Okay, so two-part question for you, Kyrie. The first one is this new in the last, like enhanced interest in the last 3 months? That's number one. And number two is Malaysia unique, or are they just going to all the countries and being a little bit promiscuous about it? Yeah.
The first one, well, I guess with the president came, that really heightened it to another level, right? I mean, I would like to think that it shows that from China's point of view, Malaysia is important, right? To the whole supply chain, especially our semiconductors, our ENAs, right? And then, as I say, there are other industry also that they are looking at, to be here. So yeah, I mean, we are very important, I believe, very important in that sense. And then to answer your second question, right? This is regarding our.
Like if the delegates that come to Malaysia after that they take a train to Singapore. They go to Thailand.
So I mean, one good example, they went to Indonesia first, and then they went to Singapore, and then we met them in Johor, met up with Irda and Maida. They were happy to look at what we have here in Johor, especially, right? Because they feel that Indonesia is not that welcoming. It's not really welcome the foreigners. I mean, maybe somehow they feel that way. I mean, Singapore is great, but it's too expensive. Whether to set up anything or whatever they want to do, it's just too expensive, right? And then they cross over. They came to Johor. We hooked them up with Irda and Maida and all, and then the next day we hosted them here in Malaysia, in KL, do some matchmaking with our healthcare players here. Our YB Rafizi was there in the early morning, and then KJ or Khairi Jamuddin previously was a health minister, hosted the lunch. So surprisingly, the Chinese, they know him, so that's good. And
his podcast is a little bit more popular now.
Yes, but this is really Chinese from China. But yeah, still having said that we kind of happy that they really said that if they don't want to do anything, they want to do it here, not in Indonesia. And then of course Singapore has always been the first choice on a lot of the MNCs, but to set up a manufacturing and everything, it doesn't make sense anymore to do it in. So that's one. And then we also had another delegates late last year in Penang. So we hosted again with Tan Sri Andrew Sheng. He was a fellow for the Hong Kong University. So quite a number of them came down, but they went to Vietnam first. And Vietnam is very close with China. They have somewhat, to a certain extent, some similar culture and things like that, right? But when we hosted them in Penang, a whole day event, and then we had a dinner with them, again, they like Malaysia. So the next day, we took them around, the Bayan Lepas, and then the new area on the Seberang side. They want to do it here. They don't want to do in Vietnam. So we asked why. They said, I'm happy to say, they said that we are friendly. We are open. We welcome them with open arms. So and they like how we do things here. I don't know. Maybe I don't know how things in Vietnam that much. I probably visit once, but it's really from them. They really said, we want to do things, we want to do it. And some of them, they had never heard about Penang before this, actually. Right. But when they came to Penang, we hosted them over 2 days and everything. They loved it here. They said, this is the place.
It's the food, right? It's the food.
Yeah, it could be the food as well. The hospitality.
Yeah, the hospitality, definitely. Alvin, you got any thoughts about this?
I mean, maybe I didn't answer that question correctly as well, because we talked about tariff with Trump. Maybe I'm kind of jumping the gun a bit, but I think maybe what I did forget I think maybe if we were negotiating with the US, if anything, I think our biggest asset would be geographically where we are situated. because of the Straits of Malacca, and because the other side of the coin, who owns the other half of Straits of Malacca, isn't exactly very warm relations to them. And we talk about Singapore and China, and of course the US and Singapore. So I think that's kind of like probably our only bargaining chip per se, geographically.
We're like a budget version of Singapore.
Yeah, I mean, infrastructure-wise, I think if you talk about what Kari is saying, you talk about manufacturing. I think the infrastructure is here. Yeah. If you go to Indonesia, you're looking at 200 separate islands. Yeah. You need you need port facilities. You need roads to get to those port facilities. You need consistent power, and I think on that scale, we are definitely more set up than say Indonesia, right? Thailand, certain areas as well.
I definitely want to add to that. I mean, like you say, being a cheaper version of Singapore, right? Yeah. I mean, land we definitely have more than enough in Johor. Yeah. Water is much cheaper. Electricity, but there's the people that we have, the talent that we have. I mean, a lot of Malaysians, are working in Singapore and things like that, right? But the way they look at it, it's like, it's fine. Whatever skills that we need for Malaysia, we can have it in Johor and everything. And if they need those talents, it's just coming across from Singapore, and they can still hire them or, for certain expertise. So they said it's fine, rather than they set up something very expensive in Singapore and things like that. So we had a one whole day conversation with Irda and Maida and all, and they really said that this is because we have the ports, everything. We have all the facilities, so the whole infra is there. So yeah, they really like it.
Reminds me of a story that I read to my daughter, Goldilocks and the Three Bears, and like Malaysia is just nice, Yeah, right in the middle of everything. So I kind of want to switch cogs a little bit because as we know right now, Malaysia is in a kind of a moratorium from those tariffs, and the date is more or less around the start of July. So the question that I have for both of you that I think a lot of you probably wouldn't want to ask as well is, how to cope until July 2nd? Well, what should we do? What does the average investor do in this market waiting for the next big move? There's a lot of uncertainty. Tariffs are getting thrown, tariffs are getting pulled back, and no one can really tell where the market's going to go. But by the same token, like if you wait too late, you might miss when things come back up, right? Would you guys agree? Yeah, this is definitely a concern that a lot of investors have. So what are you guys' thoughts on that?
Okay, I think I'm not going to talk just about Bursa Malaysia alone, right? I mean, when you talk about what's happening here, we have to talk about the US market as the main market, right? If you look at the US market, in that early April, it drops, from, if I take S&P, for example, from 6,001, I think it's dropped to 4,009, if I'm not mistaken, in that 1 week period, right? And a lot of people would have been panic selling and think, oh, this is the end of it and things like that. But I saw an article that the data from Robinhood, Charles Schwab, and a few others of the American platforms, right? They found that the retail players this time around, they were not panic. In fact, when the market was down, they were coming in a big way and they were buying. So they kind of understand that, it cannot be like the 2020 when, again, thought it was the end of the world again, that March period in 2020, if you remember, the whole COVID and everything when, the market crashed down. So I guess retail players, and then the things that are happening is getting shorter and shorter. If September 11, 2001, and then GFC 2008, and then after that we had a long period of growth and everything, and then 2020 hit us, right? And then, we bounced back a bit. 2022 we're down a bit. So in recent years, there's been a lot of volatility, right?
Shorter cycles.
Yeah, the shorter cycles, and I guess people kind of like, look, this is not going to be the end of it, and then they were ready for it. So to answer this, if you all are long-term player, that drop was a discount in terms of whether it's Nvidia, whether it's AMD, Broadcom, right, and all these names, because I believe in it. We go around here, right? Even if the fridge now has all kinds of, chips in it, back then, a fridge is just a fridge, right? But nowadays, everything that you have around you, there are chips everywhere, right? So when it comes to those names drop, it's just a kind of knee-jerk kind of thing. So if you're a long-term during that April until now, and in fact now 5009, it's kind of like bounced back to where it was at the end of March, early April, before it dropped like 6,001. It's almost there. So how to cope until July 2nd? I would say, it is still a time that if you haven't bought enough, it's not bad to buy, because you look at it, US is saying, you take a look at an iPhone for everyone using it, right? There's no way they can build these things in US. It doesn't make sense at all. Who's going to buy an iPhone for $3,000? It's not going to happen, right? And Americans in general, they know you can't just, because of Trump for 4 years, you just want to build all these new factories. It takes time. And what's going to happen post-Trump after this, tariffs? So they said, no, this is just his way of doing things. So I guess we shouldn't be panicked. If we are really long-term players, in fact, if you're short-term players, you saw it down like that, to me, is a chance to get in and buy. Of course, it takes a bit guts as well.
So go down, buy some more. Go down, buy some more. Go down, buy some more.
It didn't go down all the way down, right? I mean, we have seen it again and again, right? 2020 it went down, people were panicked, but then it bounced back. 2022 was almost like the whole year was slowing down a bit. People were trying to understand like how is it going to be post-COVID. But when you look at 2023 and especially last year 2024, right, things just has been very good growth actually. Of course, this happened, but yeah.
But you said specifically in the context of the US market. What about the rest of the world?
So it depends from one market to another, right? For Malaysia, there are certain sectors or industry that was impacted, but a lot of industry was doing okay. Our banks are steady. Our gloves, we were comparing between Malaysia's tariffs and the China tariffs, and how China has come up with all these gloves and everything. But now, if they're going to be hit at 120 to 140%, our gloves will be much cheaper, and the price did well, and our REITs, and property, it didn't hit anything. So to me, we have to understand. I mean, when we do investments, everyone has, your favorites, or where do you like to put your money in certain sectors because you understand it well. So I think go with that. Always when you want to invest, you must know really what you want to put in your money. And in our case, like you say, we have all the research reports, because we were trying to guide our investors. Look, this is there are things to look at, and take advantage of the situations that we're in that April period.
Alvin, anything to add?
I think so. You're right. Actually, U.S. market has more or less recovered. The funny thing about the Malaysian market is when U.S. market is green, ours can be red. But when they're red, we are also red. That's
we were talking about this the other day, so it's so unfair, right?
It's yes, I think if you look at some Malaysian stocks, some of them have recovered a little bit. But actually, most of the stocks today are still off their January price to now. I would say at least 20-30%. Even after the dip and the recovery, they're still down, right? Right now, I think what's hanging over the head is that tariff, right? Because China and US kind of cool down. And I agree with Kyrie as well. I think decoupling is, Trump has also said decoupling is impossible, right? It's just, you're not going to build a factory tomorrow, right? So likewise, I think a lot of setup, because if you look at supply chain, it's not just China, it's China and rest of the world, right? China doesn't produce everything as well. It also imports certain things as well, right, from other countries. So, and we, Malaysia, as being still part of that global supply chain, I think I think at least now there's a little bit more certainty of tariff being okay. If China's at 30, and I think our worst case is 24. Our best case is 0. But we'll probably land somewhere in the middle. But I think regarding whatever tariff number we land at, I think it's also important to compare. If we are 10 and our neighbor is 15 or 20, right? Then it will be advantageous for us, right? Advantageous for us. Right now, I think, after that short blip, we're starting to see a lot of profit taking in Malaysia.
Is that where the uncertainty lies? Because, Kari, you mentioned that the US market is recovered almost to where it was before, right? And that's before this 60-day pause comes to an end. Whereas for the other countries, it's not just our relationship with the US, but our relationship with the US relative to each other, right? Because that dictates our attractiveness in this region, right? So is that where the uncertainty for the market, where it's not fully coming back up?
Yeah,
coming
I think, we always have to be slightly cheaper than the US because, we're not a big market, right? Malaysia is a small market. Yeah, like Kari said, the world's market is the US market, unfortunately, right? So they kind of dictate. But I think there are still a lot of opportunities in the market today in terms of pricing. I think if we look longer, between 12 to 24 months, I don't believe current interest rates will hold. I think it's very hard to hold at for above 4% for the US. So when that starts happening, I think we're gonna see another round of capital movement again. US interest rates, because right now if you're getting, you're a fund manager, you're getting 4%, 5% on US treasuries, right? Don't do anything, you get 5% return. What is something must be so enticing that you take on extra risk for an additional maybe 5% per se, right? So when that comes down, I think we'll definitely see something. I think on the local front as well, I think our central bank, I think a very major news, I don't know if you guys have followed through about the SRR, statutory reserve rate, that Bank Negara has dropped from 2 to 1%. So SRR essentially is how much percentage of total assets that the banks need to keep as kind of like emergency money or reserve, right? So that dropping from 2 to 1%, has huge implications because essentially banks now can lend more, right? So I think there were reports coming that this effect is about 19 billion ringgit that's been kind of, imagine as being released into the system lah. So you're getting kind of a monetary policy expansion effect, right, when you do that. So if you do 19 billion multiplied by our multiplier effect, I think that's quite positive. So there's basically going to be a lot more money in the system in the next 6 to 12 months because of the SR. I think it's been quite underrated, but you're going to probably see a lot more liquidity.
So actually, this is the first time I'm hearing about this SRR thing. As you know, I'm just an average, not very knowledgeable investor, and that's what I'm trying to ask here. So with regards to the SRR, does this rate change very often?
No. Yeah.
On the interest rate, it still maintains at 3, right?
Yeah.
But this one, I think the way Bank Negara or the government looks at it, it's like we need that growth, because looking at the potential, all that, what is impact on these tariffs and everything, right? So it's good to let the bank to lend more money outside. And then to add to that, CGS view is that the US gonna cut as much as 75 points, right, for the next 6 months, or maybe between 6 to 12 months, and ringgit will strengthen. That is our view, our house view. To, if I'm not mistaken, it's about 4.2 from where it is now. So that will actually help, So yeah, it's not a bad time. I'm always positive in things lah. Okay, but if you look at the more long term, of how things are, the companies are growing, whether Malaysian companies, you look at the whole ASEAN, you look at the global level also, because things are getting more efficient, the margins are getting better. I know we're not going to touch AI much tonight, I know, but it is a very big thing, big changes to how things are happening in at a global level, like how things are more efficient, things become more faster, you can do things much more efficient, and then things just getting better and better actually in just last 2 years, I would say.
I think just to answer that question, the last time SR was dropped that big of a percentage was 2009.
Wow.
Yeah, 2009. Yeah, so it's been 15
17
over
years, 16
and
years.
that's
yeah.
post GFC.
Yes, because of
That's
GFC,
post
correct.
GFC.
Yeah. So it's because GFC. So that, when you have that much liquidity, you're gonna see asset prices move up.
So let me just try and wrap my head around the SRR, because this is, I mean, it's a fairly new, I know the concept, I just didn't know that they actually dropped their percentage rate. So essentially the SRR is used to stabilize our currency. Is that a fair assumption?
Let more money to be lend out or to be in the system more, rather than the banks keep the money.
Yeah. Like liquidity control in a
Yes,
way.
correct. Yeah, in that sense.
So like for every $100, let's say very simplistic view, for every $100 that the bank
$2
has,
or $1.
Yeah, so $2 needs to be
Yeah.
kept all the time, and sometimes some banks overlend, they lend too much, and they need, so that's why you have overnight money market rates, right? So
Right.
to keep that 2%, but now pretty much so this reserve is a regulatory requirement, and sometimes it costs the bank money, because if they don't have enough deposits, then they have to borrow, right, to cover that 2%. So this will essentially, if they didn't have enough deposits and they were lending out, now it's actually reduced their costs.
Yeah.
Right, and then those that have excess capital, now they've got extra money now. You better go and because if they lend it out, of course, then they get more profits, right?
So just to play devil's advocate, what are the downsides of reducing the SRR to 1%?
I mean, bank run, bank failure, and
That's
so on.
not
So
going to
on.
happen in Malaysia. We are well capitalized and also, our banks are solid. Don't have to worry about that.
Okay. So it's effectively a way of not really printing more money, but increasing the liquidity, and then after that being able to pull it back as well.
Releasing that liquidity into the
And
market.
then, and it's reversible, unlike printing more money.
Yeah, correct. So
Yeah.
so that's why actually our banks are, after 1997, I think all the regulators kind of came together and said, "Look, no more of all this. We got to be extra kiasu. We got to be extra safe." So if you look at since then, banks have survived the 2008, 2009. They did really. I mean, they survived COVID, which was a huge thing. So it's the banking system has been kind of, we've been so conservative to the point of lending that dropping this SRR is probably not a huge deal in terms of risk profile.
Any final thoughts on this question before we move on? If not, then let's go. Okay. So before we move on, just a quick update that we have a feedback form for today, where you guys can feedback about what you see here today, what kind of questions we asked, any problems with the F&B, also suggest any new foods you guys want to see on the buffet line, any sort of formats of content that you guys want to see up here as well. Please feedback to us, and we'll try and make it happen for you guys. Okay? All right. Let's continue. So this is a part that's interesting to me. Like you said, Malaysia's playing quite nice with these tariffs, right? So Tengku Zafrul went down to the stateside, and when he came back, we vowed to buy more US goods, right? Taking a softer stance than a lot of our ASEAN neighbors. And then also President Xi arrives and says, "Hey, we're better, man," So I'm just very curious, like between these two things, sorry, just roll it back. How are we managing this relationship? We obviously know that, they've had disagreements, right? And it's tough to be in the middle of it. So where are we standing right now, as far as you guys know?
I would say, Zafrul has to do it, right? It's all, managing the relationship, right? But then, come on, like, what is, we US and us, it's straight deficit, right? It's just us, exporting more to them. There's nothing much that for us to buy from them, right? They don't produce. But then we need to look at, because this is all about manufacturing goods, okay? But we do buy a lot of them in terms of software, right? Microsoft, right? All your iPhones is, embedded is the iOS software. Some of us at the corporate, we use Salesforce, all these things. We use Bloomberg's, right? Google, everything. All come from that. They never count all those things. They only count the manufacturing goods. And then, the way how they do things, I think is not right. Someone was telling me, look, if you really want to count like how much between us and them doing things in terms of our trades, right, we should really look at per capita. That would be a better. So what US did, they just look at the overall how much we export to them, and then how much we import from them, and then we have that trade deficit, right? It is a huge gap. But then again, at the same time, as I mentioned, one is that they never count all the softwares that we are using, which is actually, we're paying to their companies, right? It's US companies. And another one on the capita, meaning it's not the same. We are 34 million people, we cannot buy enough things. No one can buy enough things from America anyway. And they are like 270 million population with, the buying power like multiple times. Like, so it's not, there's no equation there, so it's just not right.
Sorry, to stop you on one point just now. You mentioned that software wasn't counted into the trade deficit.
No, it's just all
I didn't know that.
manufacturing. Yeah, they don't count the software and all.
So
Yeah.
all the stuff that what Netflix and Facebook,
They don't count all those things.
the thousands that we spend on advertising and all that kind of thing, that doesn't count as something that we've bought from the US.
The one that they count is really, the manufacturing goods, what we export to them and what we import from them. That's how they got the deficit. So I'm talking about the deficits.
Right,
So
right,
we
right,
talk about
right,
the
right,
deficit.
right,
The trades
right,
is
right.
really the manufacturing goods that, put on a ship, sent to, Los Angeles or San Francisco, whatever.
Yep.
And then what that we bought from them that shipped back here. So of course, the deficit definitely going to be huge, right?
Right. Yeah, that makes so much sense. Yeah. Actually, one more thing also about E&E, and we were talking about this as well. Like, the trade is not really trade. It's more like it comes in from somewhere else and goes up, but we don't actually, we only take a small part or maybe a decent part of that supply chain. It's not a full, like, we buy something and we sell something, right? A lot of this stuff, especially in the E&A industry, just flows through Malaysia. Is that a right assumption as well?
Okay, so we are in this supply chain. I mean, you take Penang, for example, right? What are the companies that, the likes of the Intel, I think the Seagates and all those things, right? Those are all American companies, a lot more than companies. I think some of you probably invested in Globetronics, you invested in Inari, Metron, Vitronics, and all those names, right? All those goods is part of the whole supply chain that they have built the last 50 years, because of we are cheap in electricity, we are cheap in labors and everything, in terms of setup, and it's been built in such a way that it is for the to send back to US, the final goods. So we are in that chain, and we cannot run away from it, because it has been built that way that Americans also have been investing in Malaysia as that one of the destination, whatever all these semiconductors or whatever chips, do the extra works here, and then after that either you go direct to US or some we go back to places like Taiwan and whatnot, right? So we are built into that. We cannot run away, and then US just say, hey, you guys are like, why you export a lot of things to us? Like, it's not that we did it. It was been it was built for so many years, and a lot of it also done by them, their own companies. Hewlett Packard also is there, right? And then Dell also is in Penang, and all these are all actually US companies, and whatever Malaysian companies also, whatever that we built, it's all the orders from them, from their companies.
So it's like me blaming Shopee for sending me all these vouchers and stuff like that. I'm like, why do you have to make things so cheap, man? Okay. Alvin, any thoughts on this? Like this management of relationship?
I think all this is. Realistically, I think it's a bit lip service. I think it's. US is not stupid also lah. They also know, and I think it's very much Malaysia's claims to be neutral, but I think we are probably. Geographically we are closer to China. You can't deny that, and I think you see some of the G2G initiatives. I think for the longest time we all had to go and apply. If anyone travel to China, you have to go apply visa, and then you pay extra if you have expedite and all. Since last year it's visa free, right? And China is only visa free to I think less than 10 countries in the world. So I think if you look at the facts, right? It's obviously we are closer to China lah, in a sense. So I think buying more goods to kind of help US. I think we are really not even on the top 30 lists of countries to think about in negotiating, right?
Right. So you would say that at least on balance, China at least seems to show more interest in Malaysia than US does.
Yeah, I mean, if you think about it, if you look at history, Malaysia was one of the very first few nations that recognized China as well and built that relationship. That was during Tun Razak's time, I believe, and it's during the sugar Robert Koch was very well known in China because he started investing there very early on in the 70s, and so they've always built that relationship, that link for a long time. And the last sitting president that visited us was Obama, right? You all remember? He played golf with Najib, right? Now, anyone remember when the last sitting president before Obama came?
Was it Carter or something, is it?
It slipped my mind, but it was in the 60s. I can Google it. Subang Airport. That's how what was it? Johnson.
Lyndon B.
Lyndon
Johnson,
right?
LBJ, yeah.
Yeah.
Thank you.
Yeah. So, I mean, it's factual, right? I mean, we're too small to matter. I mean, I don't even know when Lyndon Johnson came in the 60s. It was 1965, I'm not mistaken, right? So it's quite a number. It's almost 50 odd years before, So yeah, so I think naturally, obviously the gravitation to China is just...
Actually, before President Xi, then all the other premiers?
Before President Xi, yes, other premiers have visited and we have also visited as well. So 2 ways. Yeah.
Interesting. Okay, so we have this chart that I got from the Council of Foreign Relations. And it basically shows exports, imports from China and exports, imports to US among some of the countries. And this is how Malaysia compares to some of the other people. So it's about, I would say, probably comparable to Thailand. But then if you look at Vietnam, then suddenly we look a bit dwarfed already. Yeah. How do you think this is going to change in the next 1 or 2 years, given the tariffs, and especially like Vietnam's tariffs was astronomical, right? Something like 140%. What was it? 165%. Huh?
46.
46%. Sorry, 46%. Yeah. So how do you think this balance is going to shift in the next 1 or 2 years of trade?
When you look at this, I think whatever that's happening now, again, I believe is temporary, right? Things won't be going back to the way before normal. No, there are still a lot of negotiations, a lot of trying to adjust to it. But the way I look at it, I think for between all these countries and China, it's just going to be more and more important for sure, right? Because there's no holding them back. But the one with the US, I think the likes of Vietnam, the likes of Korea, and closer home, the likes of Malaysia, there will be some impacts to it for sure. I'm pretty sure the numbers, when we look at the numbers later on, end of this year or early next year, year on year, and that's for sure going to be impact because things have slowed down quite a bit and everything. But I would say in the mid to long term, it will again normalize. But we just have to go through this tough period a bit.
Do we see a global shift to more trade with China than the US in almost
For sure.
every single country in the world,
for
right?
sure, yeah.
Then why is the liquidity all still flowing towards the US?
You mean in terms of
The equities market.
equities market? You can't, okay, you look at equities market and who are the biggest players? The institutional clients, right? And how do they do their investments? They have benchmarking that they have to do. Again, if I go to S&P 500, for example, not S&P, MSCI Global, right? When you look at MSCI Global as a benchmark, I'm talking about institutional, we're talking about billions, even trillions amount of money. They will look at MSCI Global and 50% of it is still US. That is not going to change, and that's still the benchmark, and that's still how will dictate the way they behave, how they trade, because the benchmark is 50% is still in US. They cannot ignore the US market. And then when you talk about US market, you talk about the companies. a lot of it is not really, US centric market for, it is really a global companies, right? And you look within the S&P 500, the number of companies there, or even Nasdaq 100, the companies that in there, it's mostly actually they're trading global. So for any investors, whether it's Malaysia, institutional, whether it's out of Hong Kong, out of Europe, right? The benchmark is that, and the biggest companies are all there. It's.
Is there any movement in that regard? I mean, we talked about the bonds market in the US being a lot more shaky than before, right? Is that an indicator that maybe institutional investors might shift their focus away from the US in the next few years?
They might a bit. I mean, we saw China, was it earlier this year or late last year, right? It has performed after very dull period for quite a while, right? The China market. It was last year actually, right? The second half of last year. So there have been some movements, but there could be some drop in US, and then all this shifting of companies and things like that. But I would say in a big way, you saw for the past, I don't know how many years, China has able to step up in terms of their market share or their market cap, but nowhere near what US has grown. And you look at how have they grown. You look at the market cap. That is a real indicator. Like Nvidia came out of nowhere. In before 2020 or before 2021. They were nowhere near where they are today. But it's because of what they're doing over there, the companies in terms of their innovations, for example. Look at Microsoft as well, how they re-innovate themselves, like at the share price 10 years ago before the current CEO came in, and how they kind of like reinvent themselves as well. So it is hard. I don't see how any other markets, there may be some shift, but no way to can,
do you agree of it?
Everyone has always been trying to predict US not being number one day. I think that's just, if you Google it, everyone's kind of talking about it. But I think, what Kari has mentioned, I think we can't deny that the US equities market, it's a world stock market because the depth of liquidity is there. They are open, they're not restrictive like China. Even for us here in Malaysia, we had a client that was trying to open an account here, and we've had a few PLCs where they had foreign customers or suppliers that wanted to open an account here. A lot of brokers don't want to open an account for you. Sorry, not you guys. Because they're like, oh, extra KYC, extra this, don't lah, I'm gonna make a few bucks from you, I don't want to do lah, right? And whereas access to US market, it's absolutely easy, right? So as open as we kind of say that some of these equity markets are, they're not that friendly for foreign investors at the moment, right? To give them access, unfortunately, yeah.
Okay, and now we talk about a little bit more about perceptions. Okay, so this chart shows many Southeast Asian opinion leaders who think ASEAN should align more with China in the long term. Okay, and as you can see, Malaysia is actually on the top, near the top of this list. I actually don't know who these opinion leaders are, but ICEAS I think is a pretty decent source. Yeah, and Philippines obviously is more US aligned. Vietnam actually, I don't know, that's a bit of a surprise actually, but yeah. Do you guys have any comments about this? Like how we are, earlier you talked about how China takes more interest in us, and is that probably why we have a more positive perception of China in the long term as well? And I think they've made a lot more investments in this, like the ECRL and that kind of thing as well, right? So is that why the sentiment is better there, or?
For me?
Yeah, for you first.
Look, I think if you understand the Chinese kind of strategy, back in 2014, I believe, they came out with a very bold statement, one belt, one road. Very much, they were trying to revive, Silk Road 2.0, right? Where, China was huge in trading. And they've kind of identified what they need to do, right? And of course, Southeast Asia is like right in the heartland of their One Belt, One Road initiative. So, if you look at things they've done in Indonesia, that high-speed rail between Surabaya and I can't remember. What was it? Surabaya. That's no, not Jakarta. Surabaya and Bandung. Yeah. Is it?
Never mind, we Google later.
Okay, we Google later lah. I mean that was they gave some like very cheap loans. They built it for you, and here you go, right? Of course, they were gonna do that same thing for us here in Malaysia, right? Between KL and Singapore. Actually, if we didn't stop it, next year we'll be ready, and you guys can take a train to Singapore, right? Oh, internal politics got in the way, for obviously. So I think. Because China has historically never, I won't say 100%, but 99.9% of the time they have not invaded another country. The 2,000 years of civilization, and I think for the West, this concept is weird. Like for the West, the concept that it's colonization. It is very going back to very medieval times. Where they conquer and loot, right? And that's kind of the very different concept. So what the fear mongering that's been happening is that China is going to do exactly what they're saying the West have done historically, but they maybe bribe is not a good word to call it, but it's they're definitely currying favors through investments, right? Yeah. I think that's what we see for sure, and that's why if you look at Southeast Asia right now, I mean, One Belt One Road is coming to 10 years. It's more than 10 years now, about 10 years old, and that hence we're seeing kind of this shift.
Yeah. Carrie, just very quick thoughts on this. I know you talked about the delegates coming down and everything as well.
I mean, my company in China Galaxy Securities says it's all right.
So do you guys get US delegates coming down as well? Or?
No, not really. So I mean, just a short one. I mean, I mentioned about the delegates and everything earlier, right?
Yeah.
But then, even from for CGS, ultimately we are owned by CIC actually. China Investment Corporation, which is equivalent to our Khazanah in that sense. It's a government arm. So even from not the investors, but from our own CGS, from Beijing, and then from CIC, they do come down quite a lot as well. You talk about the One Belt One Road. It's inevitable, I would put it, right? For China, they've built. You look at the highways, you look at the railways that they have built in the past 20 or 25 years is tremendous. It's just out of this world, right? And they need to look at where is the new playground for them. And ASEAN is the new playground for them. I can tell you that for sure. I mean, as I say, CGS, we used to be CGS MB, then they bought over 100% owned by them, a presence in 4 countries, and how they look at, like, there's so many opportunities in this region. We have probably 700 million population. We're not really as one like EU, but I think that's where from China they look at us like, look, there's so many opportunities in Indonesia, in Malaysia, in Thailand, and then of course Vietnam is just the next door, right? But in other countries, Cambodia, Myanmar. So when of course Philippines not much because of the tensions, but to them it's a huge playground for them. Easily for the next, just like how they built China where they are today, for the next 20 to 30 years.
So by that regard, the long-term prospects for Malaysia look actually very, very positive.
To me, it's very positive. As it's based on all the interactions that I have with them. Yeah.
So I had a recent conversation with someone from China who is in business, and he's actually moved here. I think why, he said Malaysia is like China 20 years ago. It's true. He said everything's so slow, relax. There's so many things that they've already done there that we're 20 years behind. And imagine 20 years ago we go there, they're like, yeah, these guys are 20 years behind us, right? So that's the kind of view, because it's so hyper competitive in China right now. And of course they built incredible skill sets, civil engineering, electrical engineering, so on and so forth. So when they come here, they're saying, well, easy. I mean, even like a local broker today, which is also Mumu, right, which is with Chinese origin, and of course, we have CGS here as well. So
Wow, this is like the most optimistic financial podcast I've heard in the last 2 months, man. Everyone's like, wow, things are going to be fantastic, guys. Okay, so just moving on forward. This is actually from one of your, Kyrie, sorry. This is from one of your white papers. You talked about the Malaysian portfolios with US versus China trade exposure. So you talked about the US exposure, the China exposure, and then from a KLCI perspective as well. Maybe you want to tell us a little bit more about what you guys found out here?
I go one by one. First on the US exposure, right? As I mentioned earlier, like gloves. We definitely have a better advantage as compared to Chinese players. And then on the technology, we're very much in that whole supply chain that if there's a drop in demand from US, we're going to be impacted for sure. But it's just not us, everyone else, even the Taiwanese and everyone else going to have the impact. So that's we were talking about the whole US exposure. On the China side, a weaker Chinese economy definitely, because we are two-way trade, and unlike US, it's more like deficit. But for Malaysia and China, it's a two-way trade where we do export a lot to them, but at the same time, we do import. So any issues on the China side that a weaker on the China side also, it's definitely going to have impact on us. So that's how we look at it, especially on logistics. There's a reduce. I've heard in the last few weeks there's a drop in the demand actually because of this. So and then the third one on the KLCI forecast, of course, we had to revise down. But then, as I mentioned just now, the US rate cuts, we look at about 75 points. It could be 25, 25. We don't know how the US is going to do it, but that could bring back the foreign investors. Why this is important? If you look at all the reports in the last 6 to 12 months, the outflow has been huge. Tremendous amount of.
Yeah, we talked about this too.
Yeah.
Yes.
So the only way that it's going to come back is we have a stronger ringgit, right? I mean, with a stronger ringgit, definitely they make a comeback, and that is how we look at things, and hopefully that will happen.
I think me and Alvin talked about this also, I think a previous version of the podcast where we talked about the foreign investor outflow, and then they were coming back because the dust had kind of settled, and they were expecting a bigger tariff on us because of BRICS. Remember that, Alvin, that we were talking about this? The foreign investor outflow.
yeah.
And related to BRICS.
Oh yeah, so yeah, one of the things that we started seeing investment outflow post Donald Trump, like very heavy, right? I mean, the whole last year was 4.5 billion. I think first 30 days was already 4.5 billion. So it wasn't just us; it was also anything related to BRICS or BRICS related, because the foreign investors were expecting that the BRIC countries were going to be punished more. But come Liberation Day, everyone was punished regardless, right? Even dear Singapore, who's trade deficit with the US, right? So, yeah.
I want to add another thing. It used to be when the foreigner or foreign funds were selling, right? Our local funds has always been there, supporting or buying. But things have changed a bit in terms of their strategic asset allocation and even tactical asset allocation. Some of Malaysian funds, I mean, at the end of the day, they need to make money, right? So just buying everything in Malaysia, it's not going to help them to make more money. So they also have allocated a big chunk of their investments into, again, like I mentioned just now, US, like because of the MSCI and, even other markets. So they are not, I wouldn't say they were not supporting, but they were not as big as they used to be locally as well. So hence when the foreign sell, right, that's why it's really, really went down as compared to previous years when a lot of allocation in Malaysia, hence the support has been much stronger. I'm not saying that they don't want to support, but it is an open market actually. If they feel that that's not the right level to support, then they just wait at the lower levels before they will come in. Yeah.
Okay, now let's move our marker to a little bit more localized to Malaysian-specific industries. You guys also had another paper on this where you talked about specific industries that might have high exposure to the US, both positive and negative, as I understand it, right? So, Kyrie, maybe you want to explain this a little bit? I didn't capture the full one, so I think there's a little bit more below this as well. But let's talk about these, the gloves, technology, and so on and so forth.
Yeah, I think I touched on the glove, and then but this one also we also say because of the global oversupply, hence the the price gains is a bit limited to that. On the technology, as I mentioned, this sector is very much exposed because we are in that whole supply chain, right? And then you look at that, there are approximately 75%, 60% of revenues come from US, very vulnerable to it. And as I say again, there will be drops into this, but it will normalize because at the end of the day, the Americans, they cannot build these factories, overnight. It takes time, and who would want to build something and then 3 years down the road, okay, Trump is no longer there because this is already his second term, and then what are we going to do with this factories? Just shut it down? No, they can't do that. The amount of investment, the FDIs they need to put into these things is huge, right? So it just it's all about the policies that's a bit volatile at the moment, but as I say, over time I think things will normalize. So yeah, and then of course the last one, I don't really look at gaming much nowadays. But of course, because of Genting's exposure, they have that Resorts World in US, I think somewhere in New York or New Jersey, right? So that's also could impact because of if US slowed down a bit on the spending, and I guess in this in the casinos spending, yeah. But in general, we still feel that yes, it has a huge impact. The market has been down, right? The manufacturers has suffered. The technology side has suffered. So be very cautious in terms of your where do you put your money. And there's always the two sides of the coins. Okay, if again, we shouldn't be just limited to investment in Malaysia. If the tech in Malaysia has suffered, as I mentioned very early just now, look at Broadcom. Because I was looking at the numbers recently. Broadcom, since the down in the early April, has gone up by 50%. So, so for those of you who actually understand, and as I say, you need to look much bigger picture. It's tough in Malaysia, but actually there's opportunities somewhere else. So you can't just like. Your investments, you can't just everything in equity. You have to look at fixed income, for example. You have to keep some cash as well, right? Or during the what do you call that? During the inflation time, the best is actually where it's actually your properties, because inflation means your property price will go up, right? And yeah, so you just have to look at things in the much bigger picture. You cannot just limit it to what are the sectors or industry within Malaysia alone. I always look at it that way.
Okay, so let's stick on the exposure side of things. Like, which industries do you think, Alvin, will be most affected by this whole tariff war and where we're at?
I think what has seen most affected actually, I think has been tech because it's directly impacted, right? And then on top of just general tariffs, they had Biden 2 days before he left office passed the CHIPS Act. We're going to ban AI chips, or severely limit it, right? And then Trump on, I think, May 15 lifted that, or May 14 he lifted that. So I think with this policy flip-flops actually is quite challenging with tech, because it's become so important, right? So in fact, the whole battle for 5G kicked off this whole trade war. Essentially, if you remember, they jailed the Huawei founder's daughter, right? So tech is now the new weapon, essentially. They know that it can be very powerful, and therefore they need to limit. So no longer, limiting, only defense, right? The tech is a huge space that is only going to grow. It's not likely going to shrink, right? So I think that, Ben, because when you talk about tech, it's not a Malaysian domestic business; it's a global market, essentially, right? So I think that would probably be the sector that got hit the worst, if you look at it. But also, like what Kyrie said, that's also where lies potentially the opportunity as well. For the rebound to happen, because we know the demand is there. It's just it's just politics that's in the way at the moment, right?
But I think what Kyrie was saying, especially with regards to this white paper, was that because so much of the revenue from these tech companies comes from the US, that's why it's a cautious purchase for now. But you're saying it's a great opportunity. So therein lies a little bit of a difference.
I mean, if you look at gloves as well, main part of gloves, I mean, the biggest users per capita in the world is still the US and Europe, right? So I mean, of course, they export to the rest of the world, but they don't consume as much as the US does as well. So, of course, I think if you factor in, gloves is not tech lah. So you factor in technology, tech, and that's where the politics come into play, right? And that gives it that extra volatility lah.
Boom boom. Yeah, like seasoning. Yeah. Kyrie, anything to add?
As I say, I mean, you have to be cautious. I mean, I'm talking about in general, right? I mean, as an investors, it's our hard-earned money, right? You have to make sure that you know what you get into. But at the same time, I'm not saying that Alvin is wrong. That there are opportunities, because I do see those opportunities, as I say earlier. So when the market is down, I mean, when it's Broadcom is one of the I've seen that gone up a lot. TSMC, for example, right, has gone up a lot as well, because anything related to chips anywhere around the world, right, TSMC is there. It's just that you don't see the name, out there, but inside and anything, and TSMC is there. I would say, like, I can't remember. There's one professor that came down to Malaysia earlier this year, and this is during the Kementerian Economi's conference, right? So he was talking about all these things in January. On stage, he was mentioning TSMC like 20 to 30 times. Even though the topic was not about TSMC, the topic was about the movement of the chips, like as a supply chain around the world and everything. But his discussion was topic. I remember I was texting my friend. I said, I'm definitely going to buy TSMC, just because he just mentioned it on the stage on that morning alone, like 20, 30 times. That's how big TSMC is, and I guess some people do not see it. But I'm just trying to say is that that there are opportunities actually, in times like this. So you asked just now, from now until July, look for some undervalued names, even in Malaysia. But of course, Malaysia, the recovery gonna take a bit longer. It's not like the V shape like what happened in US. So our side here probably a bit more, as I mentioned just now, cautious, a bit more wait and see kind of things. But I didn't see that in US.
Okay, so I want to talk something about what you guys discussed just now about how the US has that V shape always, right? And Malaysia has a very like a shorter V, it just like that, that kind of thing. Is that unique to us, or like is that like in the region, or is that worldwide, everywhere except US, or what's going on here? And what are your opinions on what causes it?
Well, as Malaysia has always been unique in that sense. When market goes up, we don't go up that much. But then, of course, on the downside, right, when market goes down a lot, we don't go down that much also. So that is a savior in that. I mean, I've seen it time and again. But yeah, you're right also. As I say, I believe when the panic, people were selling.
Yeah.
I mean, that happens. We saw that. But when the recovery, people are being cautious. I say they probably wait and see. I don't know. They're gonna wait for the next quarter or more convincing news. I'm not sure on the behaviors on that part. But yeah, you're right. The V is like
stuttered.
Yeah.
But is it unique to Malaysia or like other?
Oh, okay. I don't really follow much other markets. I mean, Malaysia, Hong Kong, and US, because we are here in Malaysia, but then US and Hong Kong definitely the two other markets we have to take a look at. I wouldn't say it's unique. Yeah, Hong Kong actually a bit more like US. Actually, it's quite volatile. They have that V shape. So it's been unique to Malaysia. I'm not sure about other ASEAN markets though, because I don't follow much the other ASEAN markets.
Alvin, what do you know about this?
I mean, actually, if you look at Malaysia, I mean, specifically, I think the Malaysian market, I think the US is a lot sexier for sure. But if you look at the Malaysian market, after we cleared the whole political uncertainty from 2018 till 2022, I think we were making some fairly good gains in 2023. I think we actually, if you look at the Malaysian market, it actually outperformed the whole ASEAN in terms of, because we've been flat for so long, and then, you know, when things look a bit more certain, then, you know, we were getting better valuation, so closer, because we've been quite down for a while. So I still remain bullish, but, you know, now it's not local politics that's affecting us. It's actually global politics that's affecting us, right? So we are actually, some stocks are cheaper than 2022 today, right? And I guess if you're long enough, you know, we should see a decent recovery, because it's not about growth, but I think it's about getting closer to a price and value proposition, right? Not so much. That means if you're just only counting for growth, you know, of course that's always a question mark. But I think at prices that are selling today, it's really, you know, it's crazy, because, you know, companies today are having better profits than they were in 2022, and their price could be, you know, 30% cheaper. That's where we're at today.
So the price value divergence is bigger now than it's ever been before.
Yes, correct.
Okay, and then this one was another part of the white paper that we pulled from CGS Securities, which was that Malaysian banks are holding well despite tariff tensions. I think we've done our own study on this and we found it to be true as well. Maybe you can talk a little bit about why and how this has happened.
It relates very much to the local demands, okay? Here in Malaysia, you know, although to a certain age, we say we are aging population, but at the same time, we're also still a young population, right? I mean, there's still a lot of domestic demands. People are still investing, whether in house. If you look at our number of cars, I can't believe that every year we add like 600,000 or 800,000 new cars on the road.
700 now.
700,000 new cars on the road, but our plus is still 2 or 3 lanes in the past 20-30 years. So you know, for Malaysian banks, the numbers, you know, without mentioning any names, you know, we've been looking at their loan growth. We've been looking at you know, their, what do you call it, their margins as quite healthy. All right, and I think the local businesses as well is still growing. We you know, we look at we spoke to, you know, some of the local players. They said that if you're not in the, you know, export business or whatsoever, it's just about local demands. It's still going strong. You know, we you know, they don't feel any effect. So because of that, Malaysian banks, as you know, their exposure is very much Malaysia. I mean, there are some exposure to some of these companies, export companies, but in a big chunk is very much is a local economy that is going on. So yeah, they're doing fine. And as I say, Malaysian banks are well capitalized, very solid. So, and they pay good dividends as well.
And so they've been performing well across the board in this tariff time.
Yeah.
So there you guys go.
Yeah.
There's a hot tip for you all. We'll move on quickly because we are kind of running out of time here. So this is actually the last slide, and I just want very quick thoughts on you, because I know that I don't think CGS Securities has any crypto interest right now, but maybe from a personal level, what we've noticed, or what I've noticed actually, is that Bitcoin has gone up to what, 112 today?
2, yeah.
112. And this particular rise in price feels a little bit different, at least to me, compared to the others. And I think I talked to some of you guys earlier, and some of you share that opinion as well, because it seems to now have the resilience of gold, but the explosiveness of a fresh stock. You know, because gold obviously is been since the dawn of time, right? It's only exciting when other things are exciting. So other things are exciting, that everyone flocks to gold. Whereas Bitcoin has shown, you know, a huge gains when the market is good and holding steady when the market is bad, which is an ideal combination for any sort of asset class, right? So what are you guys' thoughts on that?
Thank you for saying, you know, this is not CGS, you know, we're not into any of crypto or even gold, but more from the personal side, yeah. I just have to make that note. Yeah, I mean, on Bitcoin, because of the supply, right? There's a lack of supply in that sense, right? But in terms of the demands, more and more new investors are coming into the market, and the younger ones, like my son, he's not there yet, but he's 16 years old. Very, very soon going to go into looking at all these investments. He will definitely look at Bitcoin or Ether or any of Solana, Cardano, and all these things. Less into gold reserves. So for sure, and that means the demand is going to be there, but the supply is not going to grow as much. In fact, Bitcoin, even though they do all the minings whatsoever, but the supply cannot, the demand outgrow the supply for sure. Yeah.
Yep.
So
Yep.
hence you can see why the price will not drop as much, because there's continue to be new, investors are coming in or holding on to the price as compared to gold.
Okay, so I mean, at least from the base level investor perspective, Bitcoin for us, we've always known that people have always told us, it's digital gold, limited supply, and all that kind of thing. But for the first time ever, because of its resilience, then suddenly people go like, oh wow, it's actually performing kind of like gold at this point in time, where it's not dropping the same way the rest of the market is. Alvin, what do you think about this? I know you've supported Bitcoin for the longest time, but do you think finally I told you so, guys, or what's the message here?
Yeah, I mean, my relationship with Bitcoin is now 10 years old, more than 10 years old now.
You want to share with how you bought your first one?
Yeah, I bought it because Andrew forced me to buy and try it from an ATM machine in Melbourne in 2015. Bitcoin was $500, right? I got half a Bitcoin. The thing is, I didn't quite understand it when I bought it, but let's just kind of rewind. I think the narrative for Bitcoin is simple. It's an adoption play, right? It's an adoption play. That means slowly people. So you come up with the super early adopters, who are all the geeks, right? I mean, just like computers, right? The early guys were all the programmers and they're playing with it. And then right now, everyone cannot have a computer, right? Or a smartphone, right? So it's an adoption play. So it's always, so right now I believe it's still a very early phase of Bitcoin, right? And like what Kari said, yes, limited supply, 21 million. I think we all know that. But I think what has happened very recently in the US that's caused the price to move up, right? So we know that 1/3 of Trump's election campaign was paid for by crypto companies or crypto guys, right? So obviously he now owes them a favor. I think it was just yesterday they've passed the bill. It's called the Genius Act, and it's extremely substantial because it's effectively legalized and given out guidelines and regulations on stable coin, which means that $1 equals to 1 token. Before that, everything was extremely gray area. Banks were penalized. None of the traditional finance guys want to get in, right? So right now it's just because the Republican Party both control the lower house and the upper house. So this Genius Act, you can go and Google it. It's I don't know the full name. G stands for what? Stable coin for US dollar, essentially. Now, where I think US is now reclaiming the dominance of the US dollar. You see, for the regular average investor today who is not American, it's not so easy to open a US dollar account and then buy some treasury bills and earn 4.5% today. It's not easy, right? So Malaysia, I think we have a fairly good banking system. We still somewhat can, but you go to other countries, it's very difficult. Now, what stable coins effectively will do is actually bypass all banking acts, which means that as long as you have a mobile phone, you can now open a US dollar account and buy US treasuries, which has never been done before, because US treasuries, it's an institutional G to institutional kind of play, right? It's if you got $100 million, then let's talk about government treasury. But if you got $5, you're not going to get that access. So I think that is, and we always talk about stable coins in crypto terms as on ramp and off ramps, which means that the highway is here. to get on top, you have to go up the highway, get off the highway, right? So stablecoin is essentially the on-ramp and off-ramp for crypto. So, the recent pump in crypto recently was likely due to this passing of this act, right? And they've also made it very clear, the SEC has come out, because Gary Gensler has now left because he was anti-crypto, and the Democrats are anti-crypto. That they made it very clear for banks that they now actually can hold, because banks by definition are custodians. That means they can hold your assets, but there were never any clear guidelines that they could hold crypto. That means essentially in future you could go to your bank and deposit Bitcoin with them. That's what it's likely going to happen.
It's a recognition.
Yes.
Basically, it's a recognition at the government's level, right?
Yes, correct. So I think the clarity in regulation is another phase of what we call adoption. It's just an adoption play, right? So this could be the next adoption, right? So if US decide to say, look, maybe 20% of our reserves are 80% gold, 20% going to be Bitcoin, right? And then you have the other central banks thinking, okay, so if you're 80% gold and we're only holding US dollars, maybe we should have some Bitcoin, right? To support our currency as well. So we kind of will see this play out in the next 2 decades, right? But it's unlikely Bitcoin is going to remain at 100 again 2 decades from now if the adoption goes up, right? So.
Okay, I actually have a lot more questions about that, but we of course, running it to almost the 1.5 hour mark, so I think we should open the floor now. Ladies and gentlemen, it is finally time. If you guys have any questions to ask about today's proceedings, now is your time to shine. Sue, can we get the mic over to anybody? Anybody has any questions? You can raise your hands, and we'll bring the mic over to you. Faiz, can we get the online questions also on the screen if you have any? The guys online on our Zoom, I think there's about 40 or 50 of you right now. If you guys have any questions to ask, please do so now. Are there any questions?
Please increase my mic volume.
That was an hour ago.
Please increase Alvin's mic volume. Yeah. Anybody here? Anybody want to get the ball rolling? Oh, okay. We have a question from a gentleman in front. Please go ahead.
What do you think would happen after July the 2nd? Would there be actually tariffs imposed, or would we go back to what it was before? That means there would be some, but not as much as what is threatened.
Yeah, I think there will be some. They wouldn't take away everything, and things would not go back to what it used to be, because few discussions that we have that Trump is using this as a leverage, right? As an upper hand, so that he has bullets to go into the negotiation table. That's what he's doing. So while it doesn't make sense to charge those crazy tariffs, because it just doesn't make sense, whether even to Americans themselves, like this is going to be so expensive, and it's going to impact the economy. But we can see it already now, right? The reversal has happened actually to a certain extent, and I think it's whether it's by 2nd July or before that, it will continue to have all these the reversals and the better news. But I believe, and it's also my personal belief, there will be some still left there, because he wants to keep using it, to I don't know if you use the right word, to bully others, and then to have that upper hand. That has always been, even before this tariff itself, we were talking about this again and again. We have so many forums and these discussions. We always thought like, he's not really going to do it, and then of course we were surprised when he actually did do it. But then, even until today, we still believe it is just his way of doing things. He's a businessman, right? What do you want to do as a businessman? When you go to a table to negotiate things, you always want to have the upper hand, and that's what he has been doing. That's how we look at things.
So are you saying that there's going to be an extension of the uncertainty in a way?
Yeah, because he wants to have that that you have to listen to me, you have to do my way kind of thing. So it may not be as much, so but the way I like look at it, there's still going to be some, so that he has that upper hand.
Alvin, what do you think?
I think the sentiment in Malaysia, at least Bursa Malaysia, at least, I think that that amount is kind of priced in today. So we probably might not see another huge dip. I think it's unlikely because, our worst case is 24. Looks like the worst case, right? But I think what is uncertain, I think, is not so much the tariffs. I think it's what other crazy stuff is going to throw at us, throw at the whole world, right? Because just a couple of days ago, it was the Bank of International Settlements, right, have come out and said that if you are using Huawei Ascend AI chips, then you are in breach of export controls, right? Which is crazy, which is absolutely crazy, right? Because how you ever going to enforce something like that? Is saying that, okay, you can only buy iPhones and nothing else, right? So I think that's going to be that kind of craziness that we're not sure where that's going to go. Seems to be quite heavily centered around tech because tech equals weapons equals superiority, right? So it's an enabler, huge enabler. Yeah.
You mentioned just now that the drops or the uncertainty have already been priced in. Maybe you can elaborate a little bit more about that.
Maybe more specifically, Malaysia stocks. I think most stocks today, from January to now, we're still down. We're still down 20-30% at least. Yeah. But companies are not down 30% on profits, or they've lost 30% cash. Some of them are still net cash position, cash flow positive, paying dividends, right? So very sentiment.
I always like that point, when you say the company is still the same. I keep on telling some of the investors, look, when some of the share price, it's just the share price that drop, right? But the company business model is still the same, whether it's their software or the manufacturing, whatever, still going on as per normal. No one at the board directors resigned, or there's no shake-up of anything, everything still remains the same. It's just the share price has dropped. So hence, to me, again, I always like to look into this, people go on panic when they see rates, down 5-10%, whatever. But to me, it's like, this is the same company still. And, it's an opportunity that has been given, unless it's some really big thing. Otherwise, to me, it's like, this is all part of the volatilities that you have to see across your investment period. And for me, just to add to this, how do I see myself in terms of my investment is very simple. My youngest son is 9 years old. So I believe, the amount of money that I need, which is the big chunk, is, later when they go for their university, is 10 years from now, because he's 9 years old. So whatever happens from now until the next 10 years, I'm just going to keep on, investing, and I'm not going to stop. It's just that, of course, the timing has to be nice, but it's always, you have to be in the market all the time. That's how I look at it.
Yeah. And also, if you really believe in a company, let's say, it's a really good, let's make it like a good smartphone or whatever. When the price goes down, you buy. When the price goes up, you don't. It's the exact opposite mindset that people have to investing, right? When the price goes up, then we're like, oh my God, we have to buy it now. And when it goes down, we go like, oh my God, we got to sell it, So it's pretty much the opposite. Very interesting. Any other questions from the floor? Guys, feel free. Wow. From the online audience, any?
I think market always moves in cycles, lah. So I
Yep.
think now we're still in that down cycle. So you just gotta wait for FOMO to kick in. Not to forget, 2 months ago, some of our crypto portfolios were down 25%. Today they're all green, right? So they always move. So we're just waiting for the FOMO.
So the general message that we want to leave everyone with today is, if you believe in something in the long term, everything's on discount right now. Would you guys agree with that? Yeah. So ladies and gentlemen, with that, I think we'll end today's proceedings. Please fill up the feedback form. Let me just try and bring that up again. Faiz, can you just bring up the feedback form so people can scan it? And in the meantime, Kyrie, thank you so much for joining us today. Everyone, can we have a round of applause for our panelists? For the awesome team that has assembled all the food and beverage and all the event stuff that you see today, the Zoom. Round of applause for everybody. Ladies and gentlemen, there's still plenty of food. Please stay back, have a drink with us, talk a little bit. You guys can ask questions privately because I know some of you are privately curious as well. And with that, ladies and gentlemen, good night, and we'll see you at the next club meeting.